Before taking up dual GST model, which India is looking at because of political necessity and consensus emerging out of it. And where from we are getting this message? We have seen the first discussion paper which was placed on 10th November 2009. We got 13th Finance Commission report on 15 December 2009, followed by Department of Revenue commenting on first discussion paper on 25th January 2010. They have suggested there would be dual GST model. We'll discuss dual GST model. But what is GST? Goods and Services Tax. Goods and Services Tax is a destination-based consumption tax. It is applicable on each stage of value addition of supply chain, of which credit would be available to the buyer at each stage of supply chain. So cascading will go away and GST will bring uniformity in terms of taxable event, taxable person, valuation, classification, and the forms and procedure need to be followed in terms of registration, in terms of due date of payment, in terms of return filing, in terms of assessment, in terms of appellate, ITC, and thereafter uniformity across the country. But let's see the uniformity which we wanted to have it, whether come in GST or not. It is expected under GST the taxes which is going to be subsumed from central levy and state levy perspective. From central levy perspective, it is expected it is going to subsume CVD and SAT. From custom duty perspective, excise duty and service tax, and we got central sales tax from central levy perspective, which is going to be subsumed in goods and services tax. From state perspective, we got value added tax, VAT, we got entry tax, we got entertainment tax, we got luxury tax. These are now discussed that these taxes from central and state is going to be subsumed in GST. So after this we have to discuss what would be GST rate which India is planning. India wanted to have it. Before deciding the rate and discussing the rate issue, we have to understand that GST is there around 145 countries across the world. An average median GST rate across the world is only 17%. 17% around. We have to see the revenue neutral rate which central government and state government is discussing, and they will finalize, need to be providing level playing field to the trade, industry and commerce. At the same time, this revenue neutral rate will also provide them the certainty in terms of existing collection of their tax revenue. So this revenue neutral rate is very important from the perspective of if revenue neutral rate is higher, then the prices will go up for the consumer. So we have to see how this revenue neutral rate is being decided. But we got certain suggestion for revenue neutral rate. 13th Finance Commission suggested that there should be 5% CGST rate and 7% SGST rate. At the same time, Department of Revenue suggested there should be 8% CGST and 8% SGST, central GST and state GST. So total 16%. Then Finance Minister in 2010 suggested that there would be two rates for goods. Goods with a standard rate 20% and goods with lower rate 12%, and services would be chargeable at the rate of 16%. Now this 20% standard rate will phase out over a period of 3 years from 20 to 18, 18 to 16 at par with service 16% rate, and there would be another slab will remain 12% for lower rate for the goods chargeability. But still need to be decided by GST Council. We will discuss what are the subject matter falling under 122 Constitution Amendment Bill, which is yet to be decided. But these are the rates being discussed in public forum by either 13th Finance Commission report or by Department of Revenue or then Finance Minister in 2010. But this revenue neutral rate is very much dependent upon, because both central and state want to collect their existing tax revenue. At the same time, they have to provide level playing field to the trade, industry and commerce so that the prices will not go up. Let's see what R&R is being decided over a period of time. Now we are moving into GST, dual GST model. Dual GST model. Dual GST means dual, central and state will have concurrent jurisdiction, central and state. We got intra-state supply of goods or services. It means it is happening within the state. So let's say we are talking about Delhi. So all intra-state supply of goods and services within Delhi. And one is called interstate supply of goods or services. It means from one state to another state. Let's understand intrastate supply of goods or services. In case of intrastate supply of goods or services, there would be CGST and there would be SGST. CGST would be governed by central government, SGST would be governed by state government. To understand this particular concept, let's take an example. On 100 rupees base value of goods or services, both would be chargeable, CGST and SGST. And what would be the rate? Rate yet to be decided. But for understanding purpose, let's assume 10% is the CGST rate, 10% is the SGST rate, total is 20%. So on 100 rupees, both would be chargeable, 10% CGST, 10% SGST, and these to be paid to separate account. CGST will go to central account, SGST will go to state account, of which credit would be available in CGST and SGST respectively. So CGST credit can be used for payment of CGST, SGST credit can be used for payment of SGST, but no cross utilization permissible. So you can't use CGST credit for payment of SGST or vice versa. So what is the advantage coming out in this model? In this model, excise duty is not being charged, VAT is not being charged. And in the existing model, excise duty become cascading for the VAT dealer. So he has to calculate VAT on excise duty. But with GST model, only CGST and SGST would be applicable and there will not be tax on tax. So there will not be any cascading. CGST and SGST would be calculated on base value of 100 rupees. So cascading will go away. So in case of intra-state supply of goods or services, as I said, CGST and SGST would be applicable, which can be paid in separate account, of which credit can be taken in separate account, which cannot be cross-utilized but can be utilized for respective account of CGST or SGST. Now take up interstate supply of goods or services. In the case of interstate supply of goods or services, there would be IGST. This is a new term, Integrated Goods and Services Tax. This is nothing but a sum total of CGST plus SGST. So let's say when we are doing interstate supply of goods and services, let's say we are selling goods from Delhi to Haryana, IGST would be applicable. And what would be the rate? If we have assumed 10% CGST and 10% SGST, then IGST would be 20%. And these concepts are being discussed under first discussion paper, 13 Finance Commission report, and comments given by Department of Revenue on first discussion paper. Now what this report says, this IGST credit would be available to a buyer in Haryana. IGST would be governed by central government. So to understand this concept, we have to understand with a practical example. Let's say it's seller in Delhi selling goods to a buyer in Haryana, then seller would be charging IGST, of which credit would be available to a buyer in Haryana in IGST account. So this is about the credit concept. Whether this IGST credit can be used for what purpose? For this, it is being stated IGST credit can be used for payment of IGST or CGST or SGST. So IGST is a unique one, can be used interchangeably for IGST, CGST or SGST. Now to take this example further and understand utilization of IGST, let's carry on. Let's say the seller in Delhi selling goods at 100 rupees to a buyer in Haryana. He would be charging IGST at the rate of 20%, of which credit would be available to a buyer in Haryana 20%. Now Delhi dealer has to discharge the IGST liability. When he has to discharge IGST liability, he may use some percentage of SGST credit for payment of IGST liability. For making payment of IGST, if any percentage of SGST is being used, then in that case state has to transfer the credit to the central account, and there would be one nodal agency which would be working for transfer of credit between central and state or vice versa. Similarly, when we are reaching to Haryana, in the hands of buyer in Haryana, let's say he is selling the same goods within the state of Haryana, then intrastate provision would be applicable. He would be charging CGST and SGST. In that case, he can use IGST credit for payment of SGST as well. But the sequential way to utilize would be IGST credit first to be used for IGST, then CGST, then SGST. In case IGST credit is being used for SGST, then center has to transfer the credit to the state account, and this will happen with the nodal agency which is yet to be formed, so that it can pass on the credit between the system automatically and electronically. Under interstate supply of goods and services, the unique point which is coming out from 122 Constitution Amendment Bill, there is being said that 1% additional levy would be there for a period of 2 years or a period decided by GST Council for interstate supply of goods to the origin state, of which no credit would be available, meaning thereby apart from IGST 20%, which we are discussing as per the rate we have taken in our example, 10% CGST, 10% SGST, there will be additional 1% of which no credit would be available to a buyer in Haryana. So cascading will remain in GST scenario, and it would be applicable only for interstate supply of goods. And this 2 years period may be extended by GST Council as stated in 122 Constitution Amendment Bill. So having this 1% along with the GST, looks like cascading will remain in GST. So we have to find out the solution for it, and this 1% additional levy is not viable, not advisable to continue to have it in GST scenario.